Hi, this is Frank Blakeley from American Capital in Aliso Viejo. I wanted to talk to you today about lock periods. So oftentimes when you're calling up, you're quoted a certain rate. And the question that is least asked is, okay, what is the lock period that you're quoting this rate from? And I'm sure you guys have all heard this, that you call up, or you've heard your friends, they've called up, they got quoted a certain rate, all of a sudden they get their loan documents in a totally different rate. What we want to do is protect you from that happening. So when I am quoting a rate, what I like to do is, if I'm over the phone talking to somebody, I want to tell you exactly what you're getting. So when you're making that next phone call, if you are shopping, you know that it's an apples to apples comparison. So what is the difference? So most often rates are quoted in 15-day locks, 30-day locks, 45-day locks, and 60-day lock increments. The longer term the lock, that basically means that you have more ducks to put in a row before that lock period that loan can actually fund. So if I lock on a 60-day lock, that means I have 60 days from beginning to end that I have to finance that loan. Otherwise, there might be consequences as far as extra fees on top of that loan. So 45-day lock is typically a good ample period if I'm talking to somebody over the phone, that I can take their information over the phone, I can lock their loan, gather their information within a 5-day period of time, and make sure that it funds within that 45-day time period. So why do people get quoted shorter term rates? Well, the longer that you're out in rates, as far as in lock periods, 60 days versus 15 days, to an investor, that basically means that you have less of your ducks in a row in order to fund that loan. And they get, I guess, incentivized by getting more of those locks following through and actually funded with their banking lines. So for instance, if I locked your loan on a 30-day lock, well, that means that I've already have your information collected. I'm really ready to go, and I can lock your loan and get it done in 30 days. 15 days, the bank gives more incentive and better pricing, which often originators quote from, because what happens is, if you're locking on a 15-day lock, that means that your loan's pretty much approved. It's set, ready to go. I can lock it, request that lock period, and get ready to go and get it funded within that 15-day period. So anytime that you're getting quoted a rate, always know the lock periods, always know the pros and cons behind doing that, and really make sure that when you get those loan documents, everything's exactly what you expected, because you knew it from the very beginning.